Welcome back everyone. For our final example, example 3, we have the weighted average method. Now let's quickly have a look at our notes. When it comes to the weighted average method, it's exactly what the name says. It takes into account the average. It's based on the average cost of the item or the inventory. So for your weighted average cost, it's always the total cost of your inventory divided by the number of units available for sale. It's generally the easiest, and it's used most for businesses like Pick n Pay, Checkers, your grocery stores. They have high volumes with very small profits, inexpensive goods, so that is why they need to use something that's obviously a lot easier because they have so much stock to take into account. Okay, so these are some advantages and disadvantages of the weighted average method. Please read through them. You can also read through a little bit of this here, but please remember please don't forget that we need to remember the weighted average cost is the total cost of all your inventory divided by the number of units available for sale. Now, what we're going to do is we're going to actually use our example C or example 3 to then calculate our weighted average. So it's exactly the same as example 2, which we've done in the previous video, except here we're using the weighted average, and in example 2 we used the FIFO method. I'm actually going to make reference to example 2 a bit later, just to show you how the values actually change based on the method which you are using. Number 1, however, won't change, but let's quickly do it again. Number 1 is asking you to calculate the total number of units on hand. Remember, those are just units. They're not values, but we can quickly go through it. The units on hand, exactly the same as the previous activity or example. It's obviously the units that you have as opening stock. You add what you bought, you minus what you returned, what you donated, what you drew for personal use, minus what you've sold, gives you the units on hand. So let's have a look at that. We start with our opening stock of 200. We add what we bought, so we bought 300, we bought another 100, we then bought 250, we also bought 120. We minus what we returned. There was no drawings, there was no donations, and we minus what we sold, which is 610. So the number of units on hand, exactly as the FIFO method, 340 units on hand at the end of the financial year. Okay, number 2 is asking us to calculate the value of these 340 units that we have on hand. So they want the value of the closing stock, but this time using our weighted average method. So value of the closing stock using our weighted average method. So let's have a look at what we can do. When it comes to the weighted average method, remember the formula that I told you earlier on. To get to your weighted average, you need to take, like the formula said, just get that out quickly, the total cost or the total value of your inventory divided by the number of units available for sale. So we're just going to say value divided by units. So let's say value divided by units available for sale. So if we have a look at our values is obviously the 450 plus the 650 plus the 230 plus the 600 plus the 330. That gives me the 1810. Okay, they didn't give me this amount here because obviously we don't know when we returned. Okay, and then this one is easy. We say 610 times the 5 rand actually gives me the amount that we're looking for there. So we start by taking the 440, which is the opening value, plus our 1810, the 1810, then for the returns, we obviously take it. It's the 20 that we returned. We returned it in December, so we take it at the December price, which is R2.05. So even though they didn't give it to us, we know that we're going to take the December price at R2.05. So we take the 20 times by R2.05 and we minus our return. So we say 20 times R2.05, okay, and that gives me 41 Rand, okay. So the value up to now is opening stock 440 plus what we bought 1,810 minus what we returned, which is 41, divided by how many units do you have available to sell? You have 200 units at the beginning of the year plus 770 units which you bought minus 20 units, which is what you've sold. Okay, so if we do this quickly on the calculator, we have 2209. Divide that by 950, and so my weighted average is R2.33 per unit. That's my weighted average cost. My weighted average value is R2.33. Now to get to the value of my closing stock, I need to take how many units did I have at the end of the year? What was the value, what was the units of my closing stock? So I had 340 units at the end of the year, and each unit is valued at a weighted average of R2.33. So the closing stock value is 792 Rand. 792 Rand. Now let's quickly, before we move on, compare that to the FIFO method's closing stock. The FIFO method's closing stock was 858, which is what we did in the previous video. 858 versus the weighted average, exactly the same activity, but weighted average is valuing your stock at 792 Rand. So obviously the weighted average, you lose a little bit of your value because it's taking into account the average. Let's look at number 3. Number 3 again is asking us to calculate the cost of sales. Again, exactly like all the other valuation methods. When you have cost of sales but you don't have markup, you use the periodic way of calculating cost of sales. You start with the opening stock, you add your purchases, you add your carriage on purchases, you add your custom duties. So you add purchases, you add carriage on purchases, you add your custom duties if you have any, you subtract or less your closing stock, gives you your cost of sales. So let's actually do it. We need values here, we don't need units. So let's look at the value of my opening stock. Value of my opening stock, 440, so we can go and stick that in there, 440. The value of my purchases, exactly the same as the previous one. My purchases were a total of 1810 minus the carriage. So exactly like I did in the FIFO method, 1810 minus the carriage, because remember you're putting the carriage on purchases or the transport cost in the next item. So this is 1614. The carriage on purchases then goes there, 155. There was no custom duty, so we can just put a dash. less my closing stock, which is what I calculated in the previous question as 792. And so my closing stock is a total of 1417. The value of my closing stock, the value of my cost of sales is 1417. Compare that to the FIFO method, which is exactly the same activity. The FIFO method, our cost of sales was actually 1351. Now, what's important is to notice the gross profit in the next activity. In the next question. Remember, this cost of sales is going to affect your gross profit. They sold exactly the same number of items at the exact same selling price. However, because of the way they value stock, that changes the gross profit. So let's have a look at number 4, which is asking us to calculate the gross profit using the weighted average method. Now, for your gross profit, exactly the same like the other 2 examples. Gross profit is equal to sales minus cost of sales. So to get to my sales, I take the total number of units sold times by the price per item. So I sold 610 units at 5 Rand each. That gave me a total amount again of 3050 minus my cost of sales from the previous question, which is 1417, and I have a gross profit of 1633. Now, I want to quickly compare the two. So let's quickly just take a clean page, and compare the two. We've got our FIFO here, and we've got our weighted average method here. When it came to closing stock, FIFO was sitting at 585, the value of my closing stock. The weighted average was sitting lower at 792, value of my closing stock. When it came to my cost of sales, FIFO was sitting at 1315, and the weighted average method was 1417. So my gross profits are mostly affected, and let's look at our gross profit. When it comes to the FIFO method, your gross profit is sitting at 1699. However, using the weighted average, my gross profit decreases slightly to 1633, and the reason for that is because there's an increase in cost of sales but a decrease in the closing stock. So the increase in cost of sales obviously decreases your gross profit. And that's it for the activity. That's it for the examples. The activities will follow soon.